Chia is a smart transaction platform designed as an eco-friendly improvement on Bitcoin. Chia's method of mining claims to be far more eco-friendly than Bitcoin's proof of work. In addition to proof of space and time, Chia claims 3 other key innovations, which are more eco-friendly and decentralized farming process, more reliable and simple implementation practice, and the ability to support internal smart transaction functionality such as vaults and payment channels. If you're familiar with cryptocurrency, you've no doubt heard about the Bitcoin energy consumption argument. While it's undeniable that a lot of energy is consumed mining Bitcoin, there are also extensive arguments defending Bitcoin's carbon footprint. However, an integral part and primary selling point of Chia is that it aims to be more eco-friendly than Bitcoin. Hey, this is Josh from Phemex team. Before watching this video, remember to subscribe to our channel, to click that like button. If you have something to say it in the comments, and please follow us on social media and share this video with your friends. Thanks. So what problems does Chia aim to solve? Bitcoin has proven revolutionary since its 2009 launch, but nowadays many criticize Bitcoin's proof of work algorithm and unspent transaction output model, claiming that these essential elements come with underlying inefficiencies that have been difficult to address. As Bitcoin experienced increased adaptation, transactions slowed and fees grew. Scalability has been a pain point for years and has not only birthed solutions such as the Lightning Network, but has also resulted in several hard forks, such as Bitcoin Cash. In the early days, Bitcoin was able to function perfectly well simply on the excess of unused CPU resources across the world. But over time, and after explosive growth, single-use hardware powered by cheap electricity has proven far better at POW calculations than the general-purpose CPUs. As a result, miners have clustered into areas favorable to hosting large data centers. Many critics argue that this has weakened Bitcoin's principle of decentralization because mining is now mostly done by dedicated entities with large resources. These huge mining farms have also drawn negative attention from both the public and regulatory authorities. According to the Cambridge Bitcoin Electricity Consumption Index, Bitcoin has a carbon footprint larger than that of Sweden. The environmental impact of Bitcoin remains one of the most popular arguments against crypto adaptation and has been the reason cited for multiple government crackdowns. Again, there are plenty of in-depth arguments that Bitcoin energy consumption isn't actually such a big problem, but since we are discussing Chia, it's important to understand the perceived problems it was made to address. Let's take a look at how Chia works. One key technology behind the Chia blockchain is proof of space and time, POST. In this consensus algorithm, farmers or Chia miners must prove that they have allocated storage for the network. This method of mining is claimed to be more eco-friendly than Bitcoin's proof of work, as it doesn't waste electricity on calculations that don't generate real value. In addition to proof of space and time, Chia claims 3 other key innovations. One is farming. To be economically viable, proof of work mining requires specialized and resource-intensive hardware. The Chia team claims that since tokens can be farmed by allocating unused storage, the process is meant to be more eco-friendly and decentralized. All that is required to farm Chia is an initial plotting process executed by Chia's node software, after which very few resources are consumed. As no specialized hardware is required, allocated space can be easily repurposed at any time. Next is Chia Lisp. This Turing-complete programming language is based on Lisp and designed specifically to facilitate the development of smart transactions. Chia Lisp aims to integrate the power of Ethereum transaction model with the reliability, simplicity, and ease of implementation of UTXO. Examples of functionality unlocked by Chia Lisp include wallets that can send funds to authorized recipients, fund recovery when underlying hardware fails, and atomic swaps. Next is colored coins. Much like the ERC20 standard, colored coins enable the issuance of altcoins, assets, and stablecoins on top of the Chia network. Unlike ERC20 tokens, colored coins support internal smart transaction functionality such as vaults and payment channels. The technology also allows holders to create offers, which are unfinished transactions that can be distributed publicly. Anyone with access to an offer can complete the transaction by taking up the counterparty role. So let's look at who is behind Chia. Unlike most crypto projects, the Chia team has stated its desire to embrace regulation through a public listing. Chia was founded by Bram Cohen. Cohen is best known as the founder and CEO of BitTorrent, a file-sharing protocol accounting for 43 to 70% of all internet traffic at its peak in 2009. Cohen left BitTorrent in 2017 to found Chia, for which he now serves as CEO. Chia has received investment from notable institutional names. And more recently, in 2020, the company raised $5 million in an equity round led by Slow Ventures to explore the development of a DeFi-friendly base layer technology. Let's look at the Chia price history. After its first listing on May 4th at $1,600, Chia briefly rose to $1,800 before rapidly plummeting by over 50% to around $760 today. It should be noted that the token is not yet publicly available. The IOU status of current Chia listings indicate that the assets were contributed as a pre-deposit for miners. They will eventually be converted into the actual token once the mainnet becomes available. Unlike Bitcoin, there is no hard cap on the amount of Chia that can be farmed. Instead, the Chia team favors a predictable, continuous rate of inflation that they argue will give holders a shared expectation of supply and protect against unexpected emissions. Of particular note is the size of Chia Premine, which added 21 million XCH to its strategic reserve. One CoinDesk article predicted that it may take 21 years for the rest of the world to mine as much XCH as a company would own on the launch date. On the other hand, it should be noted that Chia has no plans to hold an ICO. According to COO Gene Hoffman, the tokens are owned by the company, so they could only be used with proper shareholder oversight should the company follow through with its public listing plans. Investors would be able to treat the company as a type of exchange-traded fund for its substantial XCH assets. So what is the future for Chia? While there are some promising technologies behind Chia, the token is new and largely unproven. Chia Network Inc. is seeking to foster the development of decentralized finance, decentralized exchange, and cross-border payment applications on the token's network. But as indicated by recent fundraising, the company is still in initial exploration stage. It may be some time before decentralized app developers begin to consider the token. In addition, Chia intends to sell software services and support for the open source Chia blockchain to governments, financial institutions, enterprises, and storage traders once an ecosystem is established. The company is also considering using its strategic fund to provide other companies with cheap loans as a method of encouraging adaptation of financing activities. So far, Chia has not found much of a market position beyond serving as a greener Bitcoin. Given that most holders use Bitcoin as a store of wealth, this proposition may prove dubious should the network fail to expand its applications. It is worth noting that questions have been raised about how well Chia can solve Bitcoin's problems in resource usage and centralization. Miners have recently sent hard drive prices surging to farm Chia, much in the same way that they have with GPUs in Bitcoin. So to wrap everything up, backed by a team with many years of tech experience, Chia's primary challenge moving forward will be to prove its value proposition. As the mining of many other tokens becomes inaccessible due to high hardware costs required for proof of work or initial investment requirements for proof of stake, Chia wants to bring us to a place where anyone with a computer can mine crypto. However, storage space isn't actually free, and only time and usage will tell if proof of space and time will remain more competitively accessible for individuals than other proof systems. Furthermore, critics of Chia argue that producing hard drives is environmentally unfriendly and therefore not necessarily a greener alternative. This argument is especially poignant to those who believe Bitcoin is not actually environmentally unfriendly. Finally, the general crypto community has mixed feelings regarding traditional governance structures. So while the more corporate nature of Chia may provide a level of transparency and security once the company goes public, it also attracts criticism for those who believe cryptocurrency is here to offer a new way to run things. Alright, that's all about Chia for now, so thanks for watching this video, and I'll see you next time. If you don't have a Phemex account yet, just click on the link in the description, or scan the QR code on the screen. Create a Phemex account, and you will get a 7-day free premium membership trial and other trading bonuses. To learn more about Phemex and cryptocurrencies, watch out the videos in the box on the left. And if you're new to the crypto world, have a look at the videos on the right for some of Phemex's user tutorials. Thanks for watching this video. Bye.